Morning, welcome to IG's early morning call. It is Thursday, the 30th of March. Let's take a look at what's happening in terms of the markets on this trading day ahead. We've got 2-week highs for many of the world's advanced stock markets. The ASX 200 overnight in Australia been led higher by miners, but we've got 2-week highs across many of the European and US markets as well, expecting a slightly stronger start beginning of today's trade at the top of the hour. Meanwhile, on the foreign exchange markets, not much move overall, but we're watching potential moves on the euro-dollar trade as we await today's release of a flash number for German CPI growth. Why do you expect it to slow? Could there be an upside surprise? And the big news this week has been around Alibaba and the breakup that's been proposed by the Chinese authorities. And many private banks now getting involved and saying that it actually could be worth a lot more after the breakup. Take a look at what's happening with volatility. It's been down now for a fifth day in a row, indicating that markets do appreciate that there's still value to be had in risk assets, currently trading 21.32. I was talking about this yesterday to an IG client, and we were talking about this move that we've got underway here and where we go from this point. And we were looking at the Fibonacci, and yesterday we saw this break of the 76.4%, which indicates potentially a total retracement all the way down to 1977. Now, if we get that, and of course momentum, as you can see down here, is picking up on the downside. If we get that, it does mean that money is going to be searching out somewhere to make profits. And you can see here in the London markets, expecting a stronger start. And we're trading at levels at the moment not seen since the 15th of March. So these 2-week highs across many of the global markets, the German DAX seeing a rise as well at the start. Same sort of performance. We've got this little rally underway here. We're past the 50-period moving average, 15,514. And the markets as well across the rest of Europe enjoying a similar lift. Strong day yesterday in France. French CAC 40 pretty much the top of the candle, again at levels not seen since the 10th of March or so. So money going into the European markets at the start of today's session at the top of the hour. Let's take a look at what's been happening overnight in the Asian markets, particularly what's going on in Australia with that rise in excess of 1%. Hang Seng Stock Index also up today. Nikkei 225, a little bit of pressure on the way down, but broadly speaking, this Australian ASX 200 is being led by what's been happening in the mining companies, because the markets there have been led up by companies like Fortescue Metals. Chief executive there, Andrew Forrest, thinks that China's economic recovery will lead to a demand in commodities stronger than the period that we saw following the 2008 crisis. At the time, China avoided recession with a stimulus program that supported infrastructure development, which boosted demand for commodities. But since 2008, China's economy has grown to become the world's second largest. So any recovery on from this point will possibly be more felt across the commodities spectrum. And this could well end up helping a lot of these mining companies as a result. But anyway, Australian markets up over 1% in the session in today's trade. Let's take a look at what we've got in terms of the close on Wall Street. As of the end of yesterday's session, we saw gains in excess of 1% across the piece. At Nasdaq Composite up 1.75% as at the close of yesterday's session, and we're building on that as well at the moment. Not too far away now from the highs we saw back on the 22nd of March. This chart pushing higher after yesterday's gains, and if we were to close at these levels, it would be the highest close we've seen on this on the Nasdaq since the 26th of August last year. So you can see the general appreciation of risk assets pretty much across the board. This is the Dow, same sort of price action, not too far away from levels there, not seen since the 9th of March. But the Dow has been one of the underperformers. I think tech stocks are those that we've seen most upside. S&P 500, after yesterday's strong day, we've got a rise to 4,034. So you'd be caught the wrong side of trade if you've been out of the markets expecting a drop as we see money, as I say, go back into risk assets. Now, talking about other aspects of the markets, let's take a look at what's been happening on the foreign exchange markets. I want to begin, first of all, with the 1 o'clock release today of German consumer prices. The economists in this area expect the index to rise to 7.3% in March year on year. But that's a deceleration from the 8.7% growth that we saw back in February. EU harmonized CPI, this is a reading favored by Christine Lagarde's team at the European Central Bank, is forecast at 7.5% year on year. The February number was 9.3%. Now this, if it comes to pass, would be a pleasant surprise and would go some way to support this idea that perhaps maybe the ECB is done with raising interest rates at 50 basis points. Before I take a look at the euro-dollar chart, just a quick look at what's happening a little bit later on today, 1:30 p.m. We get initial jobless claims in the States. Expectations are for a 196,000 new claimant count last week. The previous week was 191,000. Also at 1:30 p.m., we got the final reading of US GDP in the first quarter. Economists anticipating the economy to have expanded 2.7% during that period. Just a quick update on where we are in terms of the euro-dollar trade. I've not been rushing to show you this because, quite frankly, it's not really going anywhere. Yesterday, there was the slimmest of candles. We're currently trading at 108.36. A little bit of money taken down from that euro-dollar position that we've seen over the last few days. But to be honest with you, I think we're waiting further indications as to whether or not the Fed, European Central Bank, Bank of England, is done in raising interest rates at the fast pace that we have seen. So that's where things are there at the moment. Let's change gear and take a look at what's happening in terms of some of the corporate news headlines that we've got this morning. And I want to begin first of all with H&M. It's just posted a surprise operating profit in December, the February period, December to February, despite continued weak demand. This is the chart that we've got here. Now, I've picked this out of the CFD charts. It's not on spread bets, but this is a CFD chart on the IG platform. It'll open at 122.56. Operating profit at the Swedish group, the fiscal first quarter there was 69.73 million. Analysts had expected a loss. So I think on the whole, this surprise upside could potentially give us a little bit of a lift at the start. I think especially seeing as we've got money going into risk assets this morning. So if you're long at 122.56, the stock goes down here below the 120 level with a view to taking that stock up at the start of today's session. So that's where things are at the moment in terms of Hennes & Mauritz, which is worth watching at the start of today's session. Now, earlier this week, the Chinese authorities authorized a restructuring of the internet giant Alibaba, transforming it into a holding company, and its activities would be divided into 6 subdivisions, each with their own chief executives and their own identities. Alibaba shares soared as much as 16% on the news. Now, overnight, Alibaba's group chief executive, Daniel Zhang, told investors that the breakup will allow its units to become more agile and eventually list on their own. On the same call, Alibaba's chief financial officer, Toby Xu, said the group would continue to evaluate the strategic importance of these companies and decide whether or not to continue to retain control, adding that each company can pursue financing and IPOs as and when they are individually ready. Now, this is a really big departure for the Chinese authorities. When asked for a timeline about the listings, Xu said the changes would come into effect immediately. Take a look at what's been happening in the stock overnight in the Hong Kong markets, building on the big gains that we saw on the previous day. After 16% rise, we've got a 1.48% rise today. And the plan seems to make sense to analysts who believe that Alibaba is currently undervalued as a conglomerate. Morgan Stanley says the stock value could double. A breakup would allow investors to each value each individual business division independently. I want to show you the all sessions chart. It trades on the New York Stock Exchange all sessions, which means we will open at 9 o'clock this morning. And we're expecting a little bit of an uplift today at the start, 9 a.m. UK time. Since Chinese authorities started their crackdown on the country's tech sector, Alibaba's market valuation fell tremendously, losing 81.83% of its value from the record highs we saw back on the 27th of October 2020, down to this low point we had on the 24th of October last year. Since then, there has been this moving up. But you can see quite clearly the gains we've seen in the last couple of days. I think this could well continue in the session in today's trade. At the start of today's session, all sessions on the US platform at 9 o'clock UK time this morning. Let's now move on to other areas of the market. I want to follow up on what's been going on with crude oil stockpiles, because just a couple of days ago, we saw 6.1 million recorded as a drop on the API a couple of days ago. The EIA has now seen crude oil inventories fall by 7.5 million barrels last week. Gasoline stocks falling, inventories rising. This reflects pretty much what we've seen on the API just the previous day. So there is this supporting of the recent rises that we've seen on crude oil markets. This is where we are for US crude, trading at 73.07, just a reference on what's going on with Brent. This too is holding on to recent gains at 77.59. Let's move on to what else is happening in the commodity space with gold, first of all, before we take a look at a couple of other areas of interest. 1968, not much move on the last 3 or 4 days or so for the price of gold. Analysts yesterday talking about this area of 2000, and many are suggesting that could well be very tough for the market to break unless there is some other stresses or stress and strains coming out in other areas of the market. Of course, we've seen this subsiding of the fears about the banking sector in the last couple of days. If that was to come back, of course, then that would be an opportunity then to buy this back up to 2000 plus. But at the moment, at least, it's not looking as though that's going to happen anytime in the near future. Let me just follow up on what's happening with lumber. And in fact, I want to go back, if I can, to what we saw earlier. Let me just quickly go back, if I can, to the platform on IG, because I'm getting some false readings coming through on that move that we've got on the main platform on pro-real time. But on the IG platform, you can see here that we've got this moving lower, very close to this line of support that we've got here, established back on December 2022. So lumber looking as though the value could continue to drain out of that market down for this little bit of a loss that we've seen recently. Quickly going back to what's going on the other charts and follow up on what's going on with Bitcoin. Just want to briefly talk about Bitcoin because this area of the market is showing a lot of enthusiasm, and this continues to see gains. We're now at something like around about almost 9-month highs. In fact, we just struck a new high there. So very close to 9-month highs, up 49% from the low point we had back on the 10th of March. So anything to do with Bitcoin is continuing to gain extra weight. Coinbase and other companies that are associated directly with the crypto space. And the other area of the market, just very briefly, what I'll highlight, and this is what's going on with orange juice. As we saw the market close out yesterday, didn't appear to be too many sellers at 25,562. We've seen a lot of concerns about the outlook for harvests this year because of the citrus greening disease that hit a lot of harvest in Florida, and also the hurricane season, which has damaged crops as well. So that's another reason, I think, to buy into this market. Orange juice very close to record highs. As at the close of yesterday's session, it was a full closing record high. But intraday, we saw those record highs established earlier this year, 9th of February, and so forth. Watching out for that level to be broken. That is it. We are back at 10:30 this morning. Do watch out for Hennes and Moritz at the start of today's trade, at the beginning of the European session. At the top of the hour, certainly still looking for 2-week highs for those major benchmarks across Europe.